Hi and good morning everyone. I am Jude A. Rosel and I'm going to discuss about the understanding the basics of accounting and financial management, chapter 11, the first part. So, objectives. The objectives are to discuss the function of financial management, uses and sources of funds, the rules of sound financing, and the financial record keeping. Second is be knowledgeable in the analysis of financial statement, budgeting, and cash management, and some of the reasons why business fails. So let's proceed to introduction. Introduction is the basic goal of entrepreneur in accounting is to earn profit, as well as to find ways on how to increase it. Basic understanding of accounting could lead to the main objective. So the main goal of a business is to gain profit and to increase it and expand our business. Its primary goal is to provide quantitative information, primarily financial in nature, which is intended to be useful in making economic decisions. In the preceding discussion, we will also discuss managing the financial aspects of an enterprise. These are designed to give better understanding and knowledge to the recording part of the business transactions and how these transactions will be summarized to provide guides in making financial decisions to increase profit. So this topic will tackle about on how we understand and how we become knowledgeable about this topic and this information that we are well informed and we are trained to do better. So the rules of finance in an enterprise. The main objective of enterprise is money. It is compared as the bloodline circulating the human body. Money is involved in the continuous expense revenue cycle of the business as long as it is operating. So the finance function has enabled the decision across the organization, requiring deeper, cleaner insight into operations, customers, markets, and external business environment. So finance involves borrowing or lending, investing, raising capital, and selling and trading securities. The purpose of this pursuit is to allow companies and individuals to fund certain activities or projects today to be repaid in the future based on the income streams generated by activities. So the first one is money. Money is needed to purchase the tools and equipment, materials, and supplies. So we cannot start a business if we don't have money, if we don't have capital. So basically, we must have money for us to start a business, to purchase the equipments, the tools, and the things needed for our business. And the second is money is also used to pay the expenses incurred, such as wages of all employees, electric and power bills, rentals, and other expenses. So the second purpose of the money is for the expenses. So we cannot pay the wages expense, rental expense, or the electric and bills expenses if we don't have enough money to provide for our business. So still we must have that money or a specific amount of money for the expenses also, not just for the tools and equipments and materials of our business, but also for the expenses like wages expense or other expenses in our business. So the next one is, as you can see, is the flow of fund in the manufacturing firm? Well, it can be noted from the illustration that cash can be compared to a reservoir. Once depleted, it cannot supply the requirements of the other units. This result in interruption of business operation. So this is the financial discussion. First is the number one is contribution from stockholders. The second one is the long-term borrowing. The third one is purchases of fixed assets. Next is the purchases of raw materials for purchases of raw materials on. So we have so many in the production decision is to the first one is processing of raw materials into work in process, payment for direct labor and other manufacturing costs other than this depreciation charges as determined by depreciation policy, and the sales credit and collection, the sales effect, credit sales, cash sales, collection of accounts receivable, and financial decision is dividend payment, payments of interest and premium of long-term debt, payment of the interest and short-term debt, so on. So the next slide is the function of financial manager. So what are the function of financial manager? Well, financial manager distributes the financial resources of a company. He is responsible for the budget planning, and support the executive management team by offering insights and financial advice that will allow them to make the best business decision for the company. So first, what is treasurership? So a treasurership is an office in a corporation responsible for filing financial statement, tax returns, and similar documents with the appropriate authorities and agencies. So while according to the book, treasurership, it involves provision of funds, custody of funds, or cashier's function, credit collection and investment, and so on. So let's proceed to what is controllership. So according to the book, another function is to see to it that the funds are effectively and efficiently utilized. It involves financial planning, accounting records and reports, tax administrations, government reporting, and internal control. While for me, controllership means that this officer audits accounts, supervises the financial affairs of a corporation. It's responsibility of the controller. It is the responsibility of the controller to create a clear and transparent financial analysis on the health of the business. And let's proceed to the financial planning. So financial planning, it is important because the funds of the enterprise are limited and must be allocated properly to the best interest of business. So in financial planning, every detail, every money that you pinagawas or expend or kanang imo expenses or whatsoever about money and financial things, it must be allocated properly and it must be limited na kanang nakalista like that. And a financial plan is a course of action for obtaining and using money that is needed to be implemented of the business organization. There are 3 steps involved in financial planning. So what are these? establishing objectives, budgeting, identifying the sources of funds. So, first is establishing objectives. So, establishing objectives. This should be clear and specific to determine their cost of budget or budget. Objectives should be realistic. So, the main objective is it must be realistic. It must not be biased. Kanang wala ba kanang mga lies sa atong financial statement or financial planning? Dapat it must be realistic and it must be true, not biased. That is, available resources in terms of human, material, and financial inputs can support them. Otherwise, such objectives are not attainable. So, it must be realistic na kanang may support sa human, material, and financial inputs. That. So, next is budgeting. So, what is a budget? What is budgeting? A budget is an estimated or projected program of expenses and incomes over a specified future period. Excuse me. So budgeting, so kanang halimbawa nasa kanang as a student, so kanang ang atong allowance ato ba yan na siya gina budget. So for one day 300 or for one day 200 atong budget kana ba dapat we have a specified budget para sa atong businessman. So incomes come from estimated sales, while expenses are based on both fixed and variable cost of operations of the business, like salaries, rentals, taxes, payments, and water, electricity, and others. So so one income, like nakukuha lang nato na by our estimation kung pila ang atong makuha na income for the week or for a day, like that. While the expenses, it is fixed. Kanang sa wages sa atong employee, fixed na jud na. Kanang sa taxes, well, mabayad jud ta sa fix kung pila talaga ang atong sa taxes and materials, kung pagpila talaga ang atong materials na ato ginagamit. So, number 3, identifying the sources of funds. There are 4 ways of financing in a business enterprise. The first is the income from sales, owner's money, and sale of shares of stock, borrowings from friends, relatives, and financial institution issuing bonds, and the last one is sales of some property of the enterprise as a last resort. So, identifying the source of funds. So, first one is the income from sales. So, pwede kanang asset ba nato na kanang income from sales. So, pwede nato na magamit to expand our business. Like that. And the second one is owner's money and sale of share of stock. So, owner's money. So, our personal money na. Kanang gigamit na nato ang atong personal na money or our means. And the third one is borrowing from friends, relatives, and financial institutions. So, we borrow money or funds to expand or to create business and to start a business. Like that. And the third one is sale of some property of the enterprise as the last resort. So, last resort na nato kanang ibenta na nato atong property or atong things na pwede nato ibenta para to start a business or to expand our business. And the next one is the sources of funds. Fund coming from owners can be identified according to the type of business, whether a sole proprietorship, partnership, corporation, or cooperative. So, the sources of funds depend upon the owner or the type of a business, whether a sole proprietorship or kanang solo ra ba sa ato lagi money or partnership sa atong duha sa atong uban na ka-partner or cooperation sa atong ibang and also there are funds that are borrowed and they are known as liabilities. They are categorized as current or short-term liability financing and long-term liabilities financing, which I will be discussing in the next slide. So, two types of borrowed liabilities: short-term liabilities or financing. So the short-term financing is 1 year or less, like that. So the trade credit goods are delivered to the retailers on consignment basis. This means they have to pay the goods within 30 to 90 days. Such credit lines applies to retailers with good reputation or established business relations. So ang trade credits is like makabarrowed ka sa kanang mga products, etc. If kanang dapat nimo siya bayaran within 30 days or 1 month to 3 months only. While the next one is promissory notes. This this is a written pledge by a borrower to pay a certain sum of money to a lender or at a specified future date. Such loan entails an interest. So, a promissory notes is kanang notes baya na imo na isi-send na or kanang imo pipirmahan na like I will be paying you by next month, kana ba na you have nagpromesa ka by notes na imo na siya bayaran, imo jud na bayaran. And the next one is the unsecured bank loans. So commercial banks grant underrated and short-term loans to their customers at interest refers that vary in accordance with their credit ratings. Borrowers with high credit ratings get lower interest rate. So, the more naggamay ang imo ay palit ang imo the more malaki ang interest na makukuha mo. So, while the borrowers with high credit ratings get the lower interest kaning sa secured bank loans. Sa commercial paper, this is a short-term promissory note issued by big corporation. Commercial paper is secured by the reputation of the issuing corporation. There is no collateral involved. Big terms with excellent credit reputation can easily raise the large amount of money from financial situation. So the second one is the long-term financing. So it is more than 1 year. So loans. Many firms finance their long-range activities from loans borrowed from banks and other financial institutions. These require collateral such as land, equipment, and machinery. So, ang loans baya ay di man ta jud maka-loan if walay collateral na nakasangla, nakalista kana. So, halimbawa ako magborrow ko og 1 million. So, kana siya bago ako makaborrow sa 1 million, na jud nan promissory na kaning specific land na if di man nako na mabayaran na 1M, so ila man na hatako na land ko kana ba. So stock, this is a certificate of ownership. Stock is classified as a common and preferred. Holders of common stock can elect directors and can decide measures, corporate actions, like that. So, kaning siya sa stock, it's about the corporation na we are a stockholder na kanang pwede nato na siya ibenta or pwede na or the higher price. So kanang ang uban gani kay nagpalit sila og stocks, tapos for how many months if nabawi na nila ilang puhunan, ila naman na ibaligya sa uban to gain more profit, like that. So the bond, so this is a certificate of indebtedness. It pledges to repay a specified amount of money with interest. Such certificate indicates also a maturity date. So kaning bond, kanang murag nag-loan raman ta, pero naa siya interest. Like if halimbawa mag-borrow ko og 20,000 and for 1 month na siya 5%. So kanang ako na ibayad for kanang 21,000 na kana.
Everyone, I am Roseanie Feb E, Espinosa. So I'll be tackling the second half of the report. So now we will discuss the rules of sound financing. So basically in borrowing, you must be careful not to overlook the financial structure of your business. Ideally, there are 40-60 ratio that must prevail. So what is a 40-60 ratio? So it means that only for 40% debt and 60% equity must finance your business. For example, if you need 100,000 to set up your business, only 40,000 must be borrowed and it is considered as debt or liabilities. And the rest of 60,000 must come from your own contributions, which means owner's equity. It's from your own savings or your own finances. This 40-60 ratio is recommended in order to, first is to provide for future borrowings when business will expand. Second is to meet changing circumstances and situations. So in addition to debt equity requirements, we must comply with the following rules that a firm will have a sound financial structure. First is to fix asset and the working capital requirements. Means during normal operations must be financed from the owner's equity and long-term loans or long-term liabilities. While short-term requirements means in like additional working capital, meaning during peak seasons like Christmas, school opening, and other special occasions, must be funded from the sources that offer short-term loans like 36 to 90 days, short-term bank loans 2 or 3 months, pawn shops like for 3 months, friends, relatives, and family members. So basically, short-term capital requirements must be financed by short-term loans. Owner's equity or long-term loans must finance long-term capital requirements. Working capital management. This is concerned with day-to-day financial operations of business and the problem ensuring that there is enough cash in the firm to be able to pay what is owed and still continue to trade. So how does working capital work? So a firm buys a quantity of goods that is intended to sell later on at a profit. So thus it cash falls, but it has a stocks in hand. So the goods are subsequently sold on a credit terms at a profit. Further purchases are made, but the firm may not pay for these purchases immediately. So ang tawag ani kay accrued expenses. So basically accrued expenses, these expenses are incurred by the enterprises but are not yet paid. Why there is a problem? So the firm may not be able to get its hands on enough cash when the supplier asks for the payment. High stock levels including work in progress. So low profit margins and has a fast rate of sales growth when often compound to a problem. So next is the accounting equation. So basically, the accounting equation is asset is equal to liabilities plus owner's equity. Normally, ang asset gyud is equal to the addition of the liabilities and owner's equity para mahimo siyang balance. So next step is the financial record keeping. So the flow of recording business transaction is as follows. First is transaction occur daily, which is mana siyang mag-record of bookkeeping gani mo, like diary of your transactions each days. So dito niyo i-compile gani ang mga transactions like the sales, the cash distribution, the credit sales, And next is the proper supporting documents are prepared, which is ang mga receipts sa inyong di-purchase na mga items to be sold for profit. Then ang receipt po sa kanang imong sales every day, which is mao na siyang ma-occur sa imong daily sales of record keeping. So debit and credits are recorded in journal. So mo nang magbuhat pud ka kanang journal entry which comprises of your debit and credit. So basically debit is asset while credit is the combination of liabilities and owner's equities. So ang liabilities katong imong mga accounts payable, notes payable, then ang kanang owner's equity comprises the revenue and the expenses. Ang sumanang sa revenue basically means ang imong kunwari na kay business, kunwari laundry business. So mao na siya ang imong revenue, which is the laundry revenue or laundry services na nagikan jud sa imong business, like professional revenue ingana. Then ang next is the expenses like the taxes, the salaries, the telephone, the utilities or miscellaneous expenses that comprises on your business. Pero basically into business dapat malahi gyud ang kanang business expenses and your personal expenses. So next one is the summary tools are posted in the ledger. So mao na i-discuss na ko unya ang kanang ang pag-differentiate sa imong pag-post sa imong journals and the ledger. So next is the preparation of balance sheet and income statements. So what is balance sheet? So balance sheet is a financial statement which shows the financial position of enterprise for a particular date. So NASHA consists of 3 sections, which is the asset, the liabilities, and the owner's equity. So diri sa balance sheet, measures and evaluates in terms of the enterprise's liquidity, solvency, and financial structure and capacity for adaptation. So next is the income statement. So basically, income statement is a financial statement which shows the performance of an enterprise for a given period of time. So dira na nimo i-establish ang imong revenue and expenses. Then dira nimo mahibawan if either na-profit or loss sa imong business. So sa next slides, kaning journal entry bitaw kanang general ledger, explain nato ang pag-fill in sa kanang mga results sa imong transaction. For example, lahat ay problem kanang Alimasac opens a laundry shop business in Valencia City. The following are the transaction for the first month of the operation. Sa kaning journal entry, money siya ang kanang transaction nimo, kaning mga dates and money account titles, then ang debit and credit. So sa July 1 daw, Alimasac open an account with Union Bank. So aning entry, mahibawaan nimo na ang imong asset first is the katong investment ni Alimasac na pag-open niya account sa Union Bank, which is 350,000. So unsay man ang tawag ana sa debit? So basically ang tawag ana sa debit is cash and bank, while in credit mahimo siyang Alimasac's capital. So next one is acquired laundry equipment. So unsa man ang gi-accept or gidawat sa business, which is basically laundry equipment. So unsa man ang gipagawa sa business, which is the cash and notes payable. Kay nag-entry man siya diri kanang mobayad siya 25,000 sa, then mag-assume siya kanang notes, promissory notes sa katong iyang gipalitan, then later part bayaran niya ang uban. So 75,000 ang total sa laundry equipment, muhatag sa siya 25,000. So basically napa siya utang na 50,000. So ang pasabot ra gyud sa debit is unsa imong gidawat sa imong business, unsa man pod ang imong gipagawa sa ang credit man pod, unsa man pod ang imong mga gipagawa sa imong business, kumbaga imong gipa-offer padung gawas ba. So ang next one is on July 5. So nagpalita pod og delivery van ang business. So basically ang imong credit ang imong debit na pod ani unsa man imong nadawat. So ang imong nadawat is ang delivery van. So unsa man ang gipagawa sa imong business, which is ang money, pero ma-consider siya as accounts payable kasi ang kay ano man kanang gipalit man siya sa imong business, sa imong kanang money sa imong business gyud. So basically ang ma-income na imo makuha kay bayaran man pod sa imong business. So mo na siya. Then next, mo na mag-general ledger ka. I-evaluate nimo siya each transaction. Like for example, kaning cash in bank, laundry revenue, rent expenses, accounts receivable, laundry supplies, inventory, delivery van, accounts payable. I-summarize man nimo din siya. Then ang pagbuhat na po na nimo is like i-add nimo ang tanan asset. So kunwari ang total asset mo is 500,000. So dapat pag mahibawan nimo ang liabilities, if i-total po nimo ang tanang liabilities o ang owner's equity, dapat mo total po siya kung say asset. Kunwari ang asset is 500,000. So basically dapat ang liabilities is kunwari 250,000 and owner's equity is 50,000 po. So para 250,000 po para mag-equal good sila. Dili pwede na kanang ang asset kay gamay, ang liabilities kay mas dako sa asset, and ang owner's equity, i-combine mo ang owner's equity o ganang liabilities kay mas dako pa sa asset. So meaning ana dili nag-balance ang imong ang expenses. So kay mga possibilities ana wala na record, wala nimo na hibawan kung unsa ba siya na kind of transaction, kung asset ba siya, kung credit ba siya, kung ang then nag withdrawal pod ang imong ang owner tapos wala nimo gi-consider siya as liabilities or owner's equity. So basically mao na siya ang kanang pagbuhat sa imong journal entry and journal ledger. Imo ra siya i-separate ang each transaction sa imong business. So that's it. Thank you so much.
So, hello everyone, I'm Benyfel Galabin. I'll be continuing the report on understanding basics of accounting and financial management. Books of accounts are accounts usually used by the accountant to record the daily transactions or the transactions of the company. It is journal and general ledger. So, when you say journal, a chronological record of business transactions of the enterprise. So, mani siya examples sa journal na kita niyo na daily transactions good naka-record. In each transactions naa siya accounts, which is nakita sa ninyo sa reference na naa siya numbers pot. So, when you say debit, value received, credit, value parted with. So, kay nipalit man siya sa journal number 2, nipalit siya og desk calculator. So, na siya value received na office equipment worth 3,000. Kay kinahanglan mo kang bayad. So, you parted with cash na kuha mo cash for 3,000. Muna siya ang journal. Next is the general ledger, a collection of accounts usually bound showing the different transactions affecting the items accounts in the balance sheets. So, muna siya. Kung makita ninyo, kung sa journal, tagsa-tagsa gid siya no, each dates. Na nakita niyo duha sa each dates na ay duha ka accounts. Kani siya sa general ledger, mura siya summary ato niya, pero each account na. Mura siya kani siya sa cash, date per date ang transaction, pero naka-record siya dira cash ra gyud. Itong pagdawat sa journal and journal 1 naka-receive siya sales, nakadawat siya cash, ni debit, ni taas iyang cash, na nipalit pa siya office equipment, nakuha niyang cash, so remaining 7,000 na lang. Then ang salaries kay nagpasweldo man siya 40,000, so negative balance si cash, nakita na to dito ang balance na 7,000. Una si general ledger, makita sa as defined, showing the different transaction affecting items or accounts sa balance sheets. Next is the chart of accounts. The chart of accounts shows the list of accounts and their arrangement in the ledger. So, diri, makita ninyo na sa kung giingon kaganinyo na reference account. So, muna siya reference number, given sa numbers cash. Makita sa ninyo unsa ang asset, liability, capital accounts, income, and expenses accounts. Financial statements. So, main financial statements, accounting reports that conveys to interested users, management, and outsiders like the government about the performance of the company for a given period and the financial condition of the company in the specific period. So, dili nimo makita si balance sheets. Mali siya, isa ni siya sa financial statements na sa balance sheet makita nimo si asset, liability, and owner's equity. Next is the cash flows and the income statement. So when you say balance sheet, a formal statement that presents the financial condition of the company as of specific date. Muna siya ang example ni balance sheet. So, kita ninyo no, si asset is equal to liabilities plus owner's equity. Hindi siya mahita po na ma-disbalance niya. Dapat sila balance. Di po mahita po at si liabilities, dako pa. Kaysa ni asset kay insolvent tasad. So, mahita ang meaning ani si company is daghag utang niya, di na siya kabayad. Kaya wala naman siya ikabayad. Kay gamay naman kay ang asset. So, unsa din ni si asset? So, asset is items of value owned by the enterprise and includes such items as cash, claims from the customers, referred as AR, goods of sales, land, building, machineries, and equipment. Usually si asset, nani siya tulo ka classification. Makita po ninyo no, na ay current asset, total current asset, or fixed asset, or non-current asset, then na other asset, which is the patent. So, when you say current asset, consists of cash and other asset that is expected to be converted into cash during the normal cycle of business, within the normal cycle of business na siya ma-convert. When we say fixed asset, muna siya ang mga property, plant, and equipment, or PPEs, as we all say, na long run ni mo magamit, mo depreciate ang value or mo reduce ang value in the long run kay long term use pa po ni siya. Then other assets such as intended other asset na wala ni define sa akong hatag na definition, which is kana assets which do not fall under the above definition ng intangible asset. Ang example sa intangible asset is patent. Next is liability. Amount owned by the business. So, mga utang ni company. So, natay duha ka klase sa liabilities, which is the current and long-term or non-current liabilities. Kani si current liabilities, kung si asset pa, ma-convert within the normal cycle, si current liabilities, muna siya ang liabilities na mabayaran with a normal operating cycle. So, within sa normal operating cycles ron, usually 1 year. Mabayaran siya sa usa ka tuig. Kung may tag long term, as is long term or non-current, kadalasan ni bank borrowings or other financial institution na mabayaran siya long years. So, long-term period. So, magawas siya sa normal operating cycle. The next is the owner's equity. Dili nimo makita na amount invested by the owner and includes profits retained in the business or the mga retained earnings or mga dividends na magikuha ni owner. Ang pag-value sa asset, magdepende magina siya. So, but in valuing asset, all assets should be valued. But no, ang problema lang is kung unsaon nimo pag-value. Okay? Na-3 guiding principles gihatag ang book, no? Example na is a firm is going concern. When you say going concern, is that the company is stable enough to pay its liabilities or solvent enough na makakontinue siya makita nimo, ma-foresee nimo na mag-continue ang business in the long run. The next is the way you value has to be consistent. Mo value ka sa asset or apil naman na sa pag-set nimo depreciation niya. Dapat kung kani siya na asset in all its kind, dapat kung maayong kag 5 years siya ang vehicle, 5 years kinatanan. Dili ka kaabi ni mahal tas ani mo years kay abi ani na range, no, dapat consistent ka throughout the year. You value prudently. So, ngayon you value prudently, you value it what it is valued, Jude. Dili mo siya i-understated, di mo siya i-overstated. Next is sa asset, di ba, na ako ganina na ay duha ka klase sa asset. Si current asset, usually valued at cost kay mong within the year. No need siya, dili siya kanang ingon na i-depreciate. Siya madawat yun siya nimo within the year, so at cost gid siya. Next is sa fixed asset mo to akong gingon ka ganina na PPE. So it's assumed that the value will be diminished over time. Kung ang value na nindi-diminish mo na siya ang lost value sa fixed asset nimo, what we call depreciation. So, 3 basic causes of depreciation is the wear and tear, ang paggamit, ang obsolescence, ang kadugayon sa paggamit ang age sa imong kuan. So magdepende gina kung saon imo pag-depreciate si asset niya. So accounting treatment of depreciation is common method ani nila kay straight line method. So we all say straight line method, example ani is purchase price over estimated useful life. Muna siya sa kasagaran practice niya. Muna siya ang nasa libro sad. Ang gihatag ni book is depreciation is equals to purchase price less residual value over useful life. So murag silbi ginaay mabilin sa value niya after nimo gikuan sa useful life. Di siya kuan na ma-fully depreciated. Muna siya akong sabot sa gihatag ni book na example niya na formula niya sa next is as asset life o di matagiingon diri na estimated useful life or asset life. Muna siya ang number of years na expected nimo sa klase sa imong asset na magamit nimo usually varies na magamit nimo sa imong firm usually varies asset to asset and firms to firms. There are general conversion, however building kay 40 to kuan. So makita niyo no na ang years ana niya is ranges. Diri ka kay in setting value, muset masag ka sa useful life niya. Diri mosulod ang consistent principle na in one asset kung mo value ka ang ani na number of years lang, nga consistent ka dapat value imong sakto or consistent ang pag-value nimo sa imong asset. Next is the land valuation. So si land, no, dili mo ta kaingon na ma-depreciate siya. Usually mo appreciate si land. Then, land is forever and therefore no depreciation is chargeable. So, di siya parihan ni asset na mag-charge ta as expense sa depreciation, no? So, makuhaan na to. Taas na itong expense po ka na itong income. So, life analysis, therefore, dili siya chargeable. Usually pa, mo times pa. Usually, mo appreciate yun ang value sa land because of inflation and shortage. Appreciation of assets, unlike depreciation which is chargeable against profit, the increase in value or appreciation is shown in the underlying value of the business. So, dili siya usually makita ang pag-value sa ang pag-appreciate. Dili para sa depreciation na makita nimo dito jud na nigamay mong assets siya. Usually mukuan siya sa value of the business. So, there are several reasons in keeping the value of the asset at up-to-date values. Yeah, sila. Accounts are supposed to be reflected through values. Muna siya ang prudent principle niya. Having higher values, higher creative valuing. So, imong yuta, dakog value. So, kung imo siya collateral, dako po kag mahuwam. Then, it makes the shareholder invest more sa imuhang kuan. So, nindot man ang asset niya kanang nagkadako. So, murag naay kay investors na ma-attract na mo invest sa imuha. So, undervalued asset makes firms cheaper and thus and easier to take over targets. So, kani kung naa diri pod ang fraudulent or consistent principle. So, makita niyo na dili yun yung may undervalue yung asset kay minsan na, ay, wala lagi changes sa inyong asset, no? Wala siya. So, dili makita na may-improve ka. So, as the next set is, if you undervalued asset, you may look more profitable than usually are. Kaya, undervalued ka niya. Wala ko anong undervalue man niya. Dili niya siya look more profitable, pero para na ako, dili siya more profitable. Sa asset pa sa nauna, firm cheap makes the firm cheaper, thus it's here to take over target. So target to na noon kag kuan dito dako di kag asset wala lang nimo value. Next is the cash flow. So muna siya example sa cash flow, no. Supporting document that shows the sources and purpose of cash payments during accounting period. Diri nimo makita ang flow sa imong cash, as it's all said, cash flow. So ang in and out of the cash. So when you say cash is the most liquid of all assets and efficient use of cash is one of the most important tasks in the management. So, kaya dili sa ingon na daghan tag cash, gasto na lang sa takang gasto. Dapat usual mo na ganing naa si accounting kay mo monitor sa imong spending. Usually si accounting gyud ang makapugong sa mga owners na sa paggasto bitaw kay kung sige gawas og cash niya. What if walay mosulod na cash si kagawas? Puro ka outflow sa imong cash, magsigaw pamalit, bayad sa imong mga tao, sa imong expenses, sa imong mga payables niya. Wala kay inflows from your sales and receivables. So, diri yun makita nimo. Then, usually, kani siya, magamit ni siya, especially sa pag monitor or paghimo financial management reports na ang mga ratios na, which is will be discussed later by the next reporter. Next is lastly, the income statement. So, muna siya ang income statement. So, may yung tag-income. Dili, kuhan siya. Dila niyo makita pila ang performance ni business now. Shows the revenue realized by the business as well as the cost and expense incurred during realization of the said revenue. As sagingon sa kuan, dila niyo makitaan ang imong sales na o dila sa niyo makitaan ang imong expenses. So, sales less expenses mo na imong profit. Diri nimo makita pila gyud profit nimo uyon ba sa imong income statement. Then also called sa definition profit and loss. Profit and loss statement siya. Diri nimo mahiman kung nilugi pa ka or diri nihalin ba ka. Next is then when you say net profit, the difference if the revenue exceeds expenditure. So dako kay kag halin, dako kay kag sales and revenue niya, gamay di kay kag expense. So makita gid nimo didto na nihalin ka. So kung pila imong revenue, mo add na siya sa imong owner's equity. Then kung moingon pug ka og net loss, in the difference if the expenditure exceeds current revenue and is deducted to the owner's equity in the balance sheet. So, kay abi, di ba? Nahalin ka, so nidungag. Kung nilugi ka, makuhaan gid mo asset. So, mo withdraw ka para ipapatch up nimo. So revenue consists of sales or of goods, services during the period increases the owner's equity. Then when you say expenditure consists of production, selling, and other expenses incurred generating revenue, makagamay ni siya sa owner's equity. Mo ni siya si income statement related gihapon siya ni balance sheet. So usual expenditure is cost of sales, selling expenses, and general administrative expenses like salaries, na mga office supplies, ana. So some special cost. So, na naman tanong, nahuman naman ta, na nakadetermine ta example butang tag natin halin. So, unsa na to ang halin? Kita as an owner, dati to example kung yung tukod tag corporation, dati to ka option which is turn into dividends or ang halin mapaato payout of the owners, shareholders, or partner, or i-retain na to ang earnings na to for future purposes, murag i-reinvest na to sa company. So, muna siya ako ang last report. Thank you and God bless us all.
In continuations of discussion in Chapter 11 with a topic entitled Understanding the Basic of Accounting and Finance, financial ratio analysis is one of the major aspects in financial management. What is financial ratio analysis? When we say financial ratio analysis, it compares line item data from a company's financial statements to reveal insights regarding profitability, liquidity, operational efficiency, and solvency. It is also a careful study of the different items in the financials and their relationship with each others, provides indicators that lead to the meaningful analysis of the operations of a company or enterprise. There are two types of comparison of ratio analysis, the internal ratio and the external ratio. When we say internal ratio, it is the ratio can be analyzed from historical perspective, determining the trend of the ratios and comparing it to the expected future ratios for the companies can assist management in decision making. External ratio, it is a method involves comparing the ratios of a firms with the ratios of various firms or with the industry averages during a period. Such comparison gives insight into the relative financial conditions and performance of the firm. Financial ratios are classified into 5 groups. The number 1 is the growth, then profitability, liquidity, leverage or the solvency, and the activity. Entrepreneur must have an idea of the following ratio analysis to help him in decision making. First, we must discuss growth. What is growth? When we say growth, it's the process of making a business bigger and more successful over time. This can be achieved in a different number of ways, such as increasing sales, expanding into new markets, or developing new products or services. Business growth refers to the increase in a company size, revenue, market shares, and profitability over time. It is often best to start with the question, how the company grown? If the answer is no or neatly lot, then the conclusion must that there is some kind of problem unless you know that the company has the policy of no growth. The simplest way to measure growth is to compare the volume sold in the first year with the volume sold in the second year. Like for example, in the first year you sold 2,600 and the second year you sold 2,000. So it increases 600. Volume is often very difficult to obtain in any sensible form, only if the items being compared is exactly the same from the one year to another year it is the comparison is valid. The second financial ratios classification is the profitability ratio. When you say profitability ratio, it is a financial measurement or it is a financial measurement. It measures the relationship between revenues and costs. The ratios qualify the cost levels required to achieve these revenues. They can be applied at different levels within organization or industry. There are common types of profitability ratio: the gross profit margin, operating profit margin, the net profit margin, return on assets, return on equity, and the return on capital employed. The third is liquidity ratio. When we say liquidity ratio, is determine the firm's ability to meet its maturing short obligation or obligation within 1 year. From the word short term, generally, the higher the liquidity ratio of the firms, the stronger is its financial position. To get the liquidity ratio, the formula of getting it is liquidity ratio is equal to liquid asset over the short-term liability. The fourth classification is the leverage or the solvency ratio. When we say leverage or solvency ratio, it measures the extent of the firm's total debt burden and its ability to meet obligation. To get the solvency ratio, the formula is solvency ratio is equal to net profit after tax plus depreciation, then short-term liability plus long-term liability. The last one of classification of financial ratio is the activity ratio. When we say activity ratio, it indicates how efficiently a company is leveraging the assets on its balance sheet to generate revenue and cash. Look at the table, the ratio, formula, the computation, and the explanation. Fixed asset turnover, the ratio is fixed asset turnover. The formula is the sales total fixed asset over the assets. Like the computation is halimbawa 30,000 over 40,000. So there are 70 equal to 72 times. The total asset turnover, the formula is total over total assets. Then the computation is 30,000 over 70,900. Then there 30 is equal to 38 times. Then the explanation, you can read, measures the contribution of fixed asset, then blah blah blah. Next, let's move to common size income statement analysis. These tools reduces or reverts the different items in the income statement into percentage of sales. Look at the illustration. It summarizes the changes from year 1995 to 1996. It can be noted that there is an overall increase in profit amounting to 4.64% due to decrease in cost of sales by 2% and the operating expense by 2.64%. Just analyze the illustration table. Next is the break-even analysis. What is break-even analysis? When you say break-even analysis is very important for an entrepreneur. You would like, because it is the business. If your business is if the business have a growth or not. As an entrepreneur, you would like to know what level of sales will the business break even. When you say break even, it is the point where the level of sales neither produces a loss nor a profit for the business. This happens when the total sales revenue is equal to the total cost. Manang gitawag nato og break-even analysis. The total sales revenue is equal to the total cost. Zero income. Seen from the another angle, this is the point in terms of volume of sales when the business can begin to generate a profit. The profit of a business is dependent on sales, volume times selling price on one hand and cost on the other. In managing the finances of the business, you must be able to analyze these factors, cost, volume, and selling price, and their effects on the profit that the business earns. Break-even analysis is one of the tools used in analysis and measure the profitability of the company. Management can analyze the tool to determine the effect of a certain decision of situation on their operations such as lower sales performance compared to the expected volume of sales, an increase or decrease in selling prices, the hiring of additional salespeople, an increase in wages of direct labor, the rise in cost of raw materials, and the other factor affecting cost, volume of sales, productions, and selling price. Of course, you know, you need to study if your business is logi ba or dili. Kay if you don't know what is break-even analysis, magpatuyang na kag dagdag og trabahante, sigag order og kanya, logi na di ay. So padong gid ka sa pordoy. And that's all my report is ended. Thank you.
Hi, good morning, everyone. This is Karen, a Caballes, your reporter for today. Our agenda for today is about classification of costs, budgeting, cash management, provision of adequate cash to meet the needs of the business, planning cash requirements, geometric or percentage increase, and also cash budget. So for classification of cost, in using break-even analysis, it is very important for you to be able to clarify your costs into fixed costs and variable costs. Fixed costs are those costs remain constant regardless of the volume of the production. Example for this, it's rentals, salaries of executives, depreciation, wages of indirect labor, and other costs paid based on time. Whereas the variable costs are costs that are vary directly with the level or volume of the business activity. Example for this, direct materials, direct labor, and commissions. These costs go up when the production increases and down when production decreases. So, however, some costs are classified as semi-variable. Like these costs change with the change in the volume of production, but not in a direct proportion. For example, transportation, office supplies, that would be. And in order to facilitate the computation of the break-even point, costs are best classified as either fixed or variable. To compute for break-even sales, the formula is break-even equals fixed cost plus variable cost, or best equals FC plus VC. Income statement would show the following. Sales 14,545.45 cents. Less cost. Under this, it's fixed cost. 8,000. Variable cost, it's 6,545.45 cents. So profit or loss, it's 0. So this means that for short sales to break even or to incur no profit or loss, they should be able to sell 291 units or have 14,545 cents. I mean 14,545.45 cents sales. So we will look on to the computation. So to compute for break-even sales, the formula is break-even fixed cost plus variable cost. So variable cost in the case is equivalent to 45% of sales. That is variable cost divides sales equals convert this one. Variable cost is 13,500 divide by 30,000, which is the sales. So it will equal to 45%. To compute for break-even sales, we have base equals 8,000 plus variable cost, which can also be expressed as 0.45 base. Base is equals 8,000 plus 0.45 base. So, i-copy lang na to siya. So, so we will transfer the 0.45 base into left side, and when we cancel when we transfer that one, it will become negative. So we have here base minus 0.45 base equals 8,000. So the base from the third point, base is convert to 1. It's in 1, and then we will copy the minus 45 cents. I mean 0.45 cents base is equals to 8,000. So 1 minus 0.45 cents, it's equal to 0.55 base equals 8,000. So base for base pesos is equals to 8,000 over 0.55. And then the answer for that one, it's 14,545.45 cents. So in terms of units, break-even is computed as base is equal to units, and then equals to base pesos divide selling price. So as you see there, it's 14,545.45 cents divide the selling price of 50 pesos equals to 291 units. So so we need to sell a 291 units in order for us to cope up the total cost of the production without profit. So that is the reason that why we need to check the break even of the sales, so that we will know how many products that we're going to sell, in order for us to check that products that you need to sell, it's to cope up, or to I mean to be to cope up the total cost of the production, so that you will know if you will for example, you need to sell 291 units, so meaning you don't have profit for that one, because that would be the break-even point if you sold that one. So if the sales will become 350 units, so you can identify how much profit do you have there. Yeah. So, and you also have the revenue for that, as well as the unit, as well as the profit. So this, let me proceed. So going to budgeting. So we have planning. Planning is one of the more important rules an entrepreneur does. When an entrepreneur plans, he works out the objective of the business, as well as the ways to achieve them. You should always plan for the different phases of your business operations. This involves allocating resources to each of them. So a budget is a business plan expressed in terms of money and units for a definite period of time in the future. So the budget therefore includes the expected performance for a given period, objective of the firm, and the allocation of resources to the different activities like production, marketing, and administration in order to attain the said objectives. So from the word budget, we all know that budgeting is like you will be considering what is how much is the total cost of that specific production that you need to produce in order for you to have a profit. So moving forward, how is a budget prepared? The preparation of a budget follows the sequence shown below. First one is set the objectives of the business. A business objective may take any of the following forms. Target profit as reward for the owner's investment. A target sake of a number of units, or a share of the market. So that would be the objectives of business. We need to have profit. So you can choose either of that. And then for the second one, is forecast the volume of sales that the business will achieve for a given period. So we need to check, or like using break even. So how much is the volume that needed for to achieve the goal to have a profit? So number 3, assess the cost that will be incurred in producing and selling the planned volume of sales, including the cost of providing the administrative support. So this one, break even is very important, so that we will know what is our target to have a profit. We should know this one if we're going to be an entrepreneur someday. So number 4, it's determine the budget period. So you need to have a cash for this. You need enough money to have a budget for your specific business, or what how many production that you will need to produce. Okay, and then number 5 is compare cost and sales income. Establish whether the objective can be attained. If not, then investigate whether you can increase sales income investigate if costs could be reduced. As a last option, accept a lower output than what was original set. So in here, we should always compare cost and sales income, because if magbalabi ta og produce and then dili siya ina naka-demand and pila ra tong ma-income, so we compare it to our sales income, so that's the time na naaman tayo mga fixed costs like mga rentals, kanang sweldos, labor, like that, electricity, water expenses, that is fixed cost. So we need to check if the total cost of the production or the whole production, including the fixed cost and the variable cost, maka mak- maka profit baka. But more on the so much for this one. Ang iyaharid yung ang kay ani niya is pasoliday og kanang guts kani, because sometimes mo good in the business, na observe lang nako is sometimes naay siya products na need jud ka mo invest first before you will accumulate the profit. Dili siya dayon diha dayon kung ano mong profit. Need pa siya nimo isold tanan or half ana or 3/4, so that para makakuha ka sa profit. But I also experienced that even if wala ka nag what do you call that one? Wala lang ka-try o kanang nagkapital. I tried that one that I don't have capital. Actually, I don't have capital, but I'm using Wi-Fi to interact, to have sales like posting, marketing, like that. I just use Wi-Fi. So I think my cost is just the Wi-Fi, but it is a fixed cost for us, even the time that is not I'm not selling products online. So wala jud ko na gamit na capital, so I did drop ship, like imo arang supplier ang mo process tanan, and all ang after payment tanan is ang imuhang profit ilera i-send nimo, so imuhang ginansya. So daghang opportunity pod sa online. And then, so going back, we have cash management. To keep the business going, it must have sufficient cash readily available for its immediate needs. Therefore, you need to keep a close watch over your cash. This practice is called cash management. There are two primary objectives in cash management, namely, provide adequate cash to meet the needs of the business. Of course, we need to have the cash para enough siya para sa needs sa ato ang business. And then safeguard cash from loss due to theft, fraud, other criminal manipulations, and carelessness. So we should aware with that, because na ako'y nabasahan sa news about itong Ross Pharmacy na at the back, mag-close mo na siya, it's not 24 hours, so at the back of their establishment, nagsigi na kuhan dito, digging dito, or like gibuslutan siya, ginihinay dito, and then gikuha ang ilang money sa kanang ilang vault nila. So we need to secure our money. So dapat advance ta ang part, because when we say money, makapakuan jud siya sa tao na makapa-encourage siya nga makabuhat og sayo, but with that wala na tay control ana. So moving forward, provision of adequate cash to meet the needs of the business. In order to meet the cash requirements of the business, you have to determine the expected cash to be received, cash inflows or cash receipts, and the expected cash to be paid out, cash disbursement or your cash outflows for a particular period. In doing so, you can anticipate shortage, deficit, or excess surpluses. This process of planning cash receipts and cash disbursement to determine cash requirements and cash surpluses is termed as a cash budgeting. The use of digital cash budget enables one to be in a better position, like provide funds for seasonal needs, provide funds for expansion, develop a sound borrowing program, take advantage of money-saving opportunities such as discounts, economic order quantities, and plan for investing excess cash. So we have also planning cash requirements. First, make a sales forecast or estimate of your future sales. So dapat matansya-tansya na ganini mo or kanang makita na nimo ba while you're planning to have a business, dapat mas more on makalculate na nimo na makaginansya jud ko ani nga part. Di ka pwede mag-business if kabalo ka nga you will fail, but most of the time all entrepreneurs are risk takers. So moving forward, we have here your sales forecast may be done on a daily, weekly, monthly, or yearly basis. So it is easier for you to make estimates daily than forecast your sales from day to day. So it's very helpful, Jude. Now we have inventory weekly, from daily, weekly, monthly to yearly, so that we will check when is the date that is more likely to have more production that needed. Because sometimes if you don't know, sometimes na day na like holidays, most of the times dagan mamalit because they're at home, or it depends if asa located in stores, or asa ka na maligya, or sa balay ra ba, sa sa, sa gawas ba, it depends. So dapat you should know when is the time that is you can have you need to produce more products or less products. So let us say, for example, that you have decided to go into business of selling cold fruit juice in the town plaza. Let us say that you can dispose of one big plastic container of juice daily, which will fill 50 glasses at 5 pesos per glass. Your sales forecast would then be, let me check in here. So here, this is a daily forecasted um, daily sales forecast. So you can see it there that we have unit of glasses and the amount of this one. So from Monday, Tuesday, Wednesday, Thursday, Friday, Saturday, Sunday, and total. Okay. All right. So we can see for the daily sales forecast in this table, we can see that um, we sold 50 glasses of fruit juice. So we all know that per fruit juice it's 5 pesos. So 50 pesos times, 50 glasses of fruit juice times 5 pesos is equals to 250. So from Monday daw na siya nakahalin siya 50, Tuesday, Wednesday, Thursday, Friday, nakahalin siya og tag 50 glasses each day in 1 week. So Equivalent to that one, it's from Monday to 50 pesos, as so on and so forth until Sunday. And then nakakuha siya o total nga glasses in 1 week, it's 350. So times 5 in each of the classes, so 1,750 ang iyahang revenue. So we will check also the weekly sales forecast. So for the first weeks, same. Same, we have 350 glasses sold, as well as second week, third week, and fourth week. So we're going to total that one. So we have 7,000 total revenue for that. So I think this table will going to give us madali gani ang atong pagkuan kay, because if walay table dili man gud siya mahan-ay, dili nimo may specify asa mo jud to na week like that. So I think daily basis sales report will going to help us to check if halin ba nakaginansya baka usa or unsa like that. And then your monthly sales forecast would be in accumulation of the weekly forecast. So sales forecast may also be based on several factors such as the weather, major activities, events such as town festas, school openings, Christmas, other holidays, religious celebration, harvest season, or opportunities to be maximized by carrying other products. So we all know that from these several factors, we can say that during this time mas dagaghalin, mas need is mas in demand siya ani nga time, so we need to produce more production, diba? Like kung na events, it depends kung unsay may kuani mo. So unsa man sila product basta as long as dagag daw kay naray gyud siya mo buy, and it depends also if unsay trend. So we need to check that one. What is trend? Kay mabiyaan mo gud ka kung nag-basis ka pag sa una, then dili siya trend. So buhat kag daghan kayo nga kana nagbuhat kag daghang nga production sa imong product. So dili ra sad siya mahal kay di man siya trend, wa man siya naka kuanan nga specific activities or kanang mga events. So for ongoing business which have been established for quite some time, forecasting is done by referring to their past performance. So kung naatay ang daily forecasted na sa atong mga halin, weekly, monthly, yearly, we can see it. We can check nga mas dako lagi kog kita ni nga man. Unsa day naani? Unsa day naani nga time? Mas dako mo kog haling ani. Like so next year, so since dako mo kog diri nga halin, so diri ko mas mo push like kanang we experience that if Christmas kay na may bonus most of the employees, so that's the time na grabe kay production kay kabalom ta tinghatag maghatag sa mga ginugos, mo palit og gift sa self or mohatag og gift sa lain like that. So methods that can be used are straight line method, constant increase in sales forecast based on average increase per year, or geometric or percentage increase method. The increase in sales forecast is based on certain percentage. So check this. So we have arithmetic straight line method that you can see there that sales from 1993 it's just 90 units, but after 3 years on 1996, nakasold ta og 120 units. So meaning, ang ni total increase after 3 years, it's 30 units. So average increase per year, we can see that 30 units over 3 years is equal to 10 units per year. So meaning, nag-increase siya per year pag 10 units. So may uses if you will have your report it's I mean you have the report daily, weekly, monthly, up until 1 year, so that we can determine that so last time it's naka-sale ko gingan ni pero each year na mas daghan siya. So, kay you will use marketing strategy man for this para mas mo-boom pa jud ang imong business. So we have sales forecast would then be like this one. So in addition, like from 1996 we have 120 units. Since we all know that every year kay mag-add siya 10 units, so as you can see year 1997 120 units plus 10 units equals 130 units. So on and so forth. So additional 10 units. So mo na siya yung nag-gather sa arithmetic straight line method. And then for geometric or percentage increase method, from previous slide mentioned, the business realized an increase in sales of 30 units from 1993 to 1996, or 33% in 3 years' time, or an average of 11% per year. Forecasting through this method would result in the following. So we can see that since 11% man daw per year, so we have here 1997, 120 plus 11%. So we have 133 sales unit, and then so on and so forth. We should know basic math to have this. So there are other more complicated forecasting techniques. It is suggested that method to be adopted must be reflected of the company's past performance based on the sales estimates, set up an operating budget. So so maka-help jud siya kung unsa to imuhang mga past performance sa imong business. Like kung December, mga fruit salads, mga ganing mga nasa basket nga kanang mga pang-gift siya nakakuha na daan, so halin kay na siya para dili na magkuan. So dagan kayo kanang kuan, dagan kayo og kanang matabang ang past performance kay makita nimo diha kung asa ka mas mo produce og more production. After estimating the sales volume, you may now prepare the operating budget. The operating budget includes the materials, labor, overhead, selling, and administrative budgets. Using again our cold fruit juice example, the operating budget would show. So 1 week operating budgeting. So materials, 1 can pineapple, it's for 1 container 25 pesos, 1/2 kilogram refined sugar at 14 per kilogram. So we have 7 pesos since 1/2 lang siya. 1/6 black ice, so we have 8 pesos. Subtotal it's 40 pesos. And labor 1 hour over container at 15 pesos per hour. Overhead cost of equipment at 200 over depreciation. So total for 1 container 50 pesos, and for the 2 containers na ma-produce is 111 pesos. So mo yung total cost. Let us assume that this venture has no selling and administrative activities. Thus, the figure above shows that the daily operating budgets of one container and two container operation, a 1 week daily operating budget of activities considering the additional volume is shown below. So you can see it there. So from Monday, the materials is 40 pesos, labor is 15 pesos, overhead 1 pesos, so equivalent to 56 pesos. So more niyang na-accumulate. So 1 container ay ang nahalin sa pag Monday. Pag Tuesday, Wednesday, 2 containers. Thursday, Friday, 1 container. Saturday till Sunday, um, it's still 2 containers. So total of that 612 pesos. Ang iyahang um, total cost. Alright, for 1 month operating budget, um, we have also from January, first week, second week, third week, fourth week. So we all know that we know how much is the materials, the labor, overhead. So we have the total. So we will know how much is it. We accumulate every week or daily. We can check, and we will know if that day wala akong naginahin siya, nabawi ako sa bungunan, nag-break even ra siya. So okay lang. Sometimes napadyo ka ng malugi ka, but it's okay kay mabawi ram na siya on the other day. So inana jud ang business na dili always na kanang nagaghalin. So napoy time na hina, but all good naman. So start with your estimated monthly sales figure for the next 6 to 12 months. Your record of expenses will serve as a guide. So makatabang gid siya ang kuan kaning table. Do simple ra kay siya, but it will help. So finally, with the operating budgets as their basis, prepare your cash budget. Cash budget. Below are the steps in the preparation of the cash budget. Estimate cash inflows. First, estimate the sources of cash inflows. We have sales of products and services, additional investments by owners, proceeds from loans, collection of receivable, and estimate amounts of receipts. We need to have this one, estimate cash inflows. And then in estimating expected receipts for the future period, the policy of the business or company regarding term of sales should be considered. Estimate cash flow. The following anticipated disbursement to be considered in estimated cash outflows. We have cash purchases, payment of credit purchases, salaries and wages, administrative selling and overhead expenses, prepayments like rentals, insurance, and the like, loans and interest, taxes, dividends, or personal drawings of owners. Compare cash inflows versus outflows. A detailed month-by-month comparison would be determine the future surpluses and shortages of cash. This provides information as to when to put in additional cash and when to use excess for other profitable uses. So we need to have that one. And then fourth one is preparing the daily cash report, another tool to provide information on current position and in turn ensure that there is enough cash to meet the needs of the business is the daily cash report. This is a summary of the cash balance at the beginning of the day, the day and receipts, disbursement, and cash balance at the end of the day.
Good day, everyone. So my presentation outline are dealing with cash shortages, dealing with excess cash, monitoring and controlling the cash budget, safeguarding cash from loss, why do companies go broke, what makes a successful firm, and lastly, completing the picture. So dealing with cash shortages. So what is shortage in the first place? This is a situation in your business wherein something needed cannot be obtained in sufficient amounts. As shown on the screen, there are the cash may be obtained internally. It states here that if cash budget shows shortages, it is time that you look some sources of additional cash. Next is dealing with excess cash. If the cash budget shows heavy surplus at a certain period, this surplus must be invested in money or the stock market. In this way, money is not kept, but it is used to earn additional return. So this topic is will being said that if your business having a lot of money, you should invest more on something that if you have a return to you, this is what we call ROI or return of investment. Next is monitoring and controlling the cash budget. Monitoring is also another aspect of cash management. It is important to monitor activities that ultimately result in cash transactions. Unless you watch over credit sales, purchasing of good stock, and pricing, you may run short of cash even if you have an excellent internal control over your cash. After setting up your cash budget, your next task will be able to see it that your company lives within the budget. At the same time, you must make sure that the budget estimates are as accurate and realistic as possible so that cash will be available at the right time. There should be a reasonable explanation for any difference between actual budgeted expenses. So, monitoring your cash in a form of cash flow so that you can see all the money going in and out. Safeguarding cash from loss. To safeguard a company's assets, an internal control system employs an automatic check and balance by requiring that the work of one person is reviewed and examined by another. This is how to set your mindset that the money of your business is not your own money or your personal money. Next is why do companies broke? At one level, a company either ceases to trade because the bank to other creditors stop it, or voluntarily ceases to trade in calls in the receivers or the administration. In either case, action is taken because the firm is unable to pay its debts or likely to be unable to pay in the near future. Why do firms get into this situation? The accounts of a company do not cause it to go broke. Rather, accounting information reveals that has gone wrong, and there are two levels of cost: the accounting manifestation and the root problem. Accounting manifestation of failure: too much working capital, insufficient working capital, too much interest charges, too much debts, over high dividends, no cash, making a trading loss, no growth, selling parts of the firm at a loss, a very poor profit margins, and marginal profitability. There are several signs that appear altogether, and these are the root causes: not selling enough, not selling at the right prices, not modernizing, no product development or research, buying useless assets, failure to control costs, failure to control working capital, reckless borrowing, and having a cavalier or arrogant dividend policy. But remember that maybe you can add your own causes. Some may be external, maybe will be internal, but those nine factors, for whatever reason, are the heart of all business failure, including those where fraud has been involved. What makes a successful firm? In contrast to failure, successful firms do all the opposite things to the nine deadly business sins just described. Good firms sell enough of the right things at sensible prices and at the right margin to be able to utilize their assets effectively. They control costs and working capital. They plow lots of profit back. Their borrowing is appropriate to their risk exposure. We can see these virtuous features by looking at their key ratios over time and by the way the competition views them. Completing the picture. Arguably, the most important single measure of business success is the return on equity capital ratio. This measures how effectively management has used the owners or shareholders' money, and over time indicates whether the firm is making any kind of progress. At this level, the return is a profit available to the owners or shareholders to take out the business as a dividend or flow back to finance growth. The higher the return, the greater the wealth creation, either directly to the owners or indirectly by adding to the net worth of the firm. So this whole report summarizes everything on how you and your business improves and indicates progress by learning all those that I mentioned earlier. And remember, the higher the return, the greater the wealth creation, either directly to the owners or indirectly by adding to the net worth of the firm.